Workers of the world, guard your turf. The UAW takes on China. A huge new IPO, markets, and more.
Chinese markets continue to rally. The Shanghai Composite Index reached new heights over the past week and barely dropped below 5,400. The numbers are much the same for the CSI 300 index. B shares are somewhat flat but continue up overall. I still believe resistance is setting in, and 5,500 appears to be a new magic number for the Shanghai Composite. Whether it goes much further remains to be seen. Under new rules, China's Qualified Domestic Institutional Investor program allows Chinese to invest in overseas stocks offered by domestic brokers in alliance with foreign asset managers. Mellon Asset Management, for example, this week launched its Southern Global Enhanced Balanced Fund and immediately sold over $2 billion in shares. This is a new and interesting opportunity in China's domestic market, and heavy hitters such as T. Rowe Price, J.P. Morgan, Fortis, Deutsche Bank, and Societe Generale are possible players. Another week, another record IPO. This week, China's Shenhua, mentioned in last week's show, is not only the biggest IPO in China, but the biggest IPO of the year for the world, passing Russia's JSC VTB Bank that sold billions worth of shares in May. China's Shenhua attracted over $1/3 trillion in orders and could raise just under $9 billion.
For years, the UAW, the United Auto Workers of America, appeared before the U.S. Congress to bemoan the loss of jobs in the auto industry to overseas producers, primarily in China. For the past decade, the UAW cooperated with big American automakers, took pay cuts, lost benefits, and joined car companies in demanding federal action on a litany of complaints that it calls remedies for the collapse of the American auto industry. The UAW and Detroit expects the U.S. government to force Chinese currency appreciation, renegotiate or abandon China trade agreements, and provide outright protection to an industry that has, over the past generation, failed its customers, its employees, and its shareholders and investors. But this week, the UAW turned on its biggest employer, General Motors, and called the first nationwide walkout strike in a generation. 73,000 workers in 80 plants owned by GM are striking not over health plan or wages, according to their union president, but over job security, specifically whether GM will build its new electric car in the United States or in China. One of the first great industrial conglomerates, GM was the largest corporation in the world for much of the 20th century, but now owns less than a quarter of the market for new cars in the United States, still by far the most important auto market in the world. More than a decade ago, GM developed a plug-in electric car that it perversely abandoned. It now wants to reclaim that accomplishment and is pinning its hopes on the Chevrolet Volt. In fact, GM intends to make the Volt its global product for the future. The Volt was shown at this summer's Shanghai Auto Show, just after being revealed in Detroit. The key to GM's new electric car is the E-Flex electrical system that can be used with different powertrains to make a gas or diesel hybrid or all-electric car. Not long ago, GM announced ambitious plans for 60,000 volts in its first full year of production, slated for 2010. For perspective, it took Toyota 5 years to get to that level of sales with the Prius. At those numbers, GM hopes to sell the Volt for $30,000. How can GM get up and running with the Volt so quickly? According to GM Product Planning Director Benoit Schlumberger, the key to getting E-Flex volumes where they need to be for full production is the Chinese market. China, according to Schlumberger, is where interest in the E-Flex system is developing fastest, including use of the system with a hydrogen fuel cell. And he said GM expects to sell a larger number in China. GM this month announced its sales in China's domestic market reached 1 million units for the first time, a significant milestone. Last week, the managing director of GM China announced that GM was looking to build a new research and development center in Shanghai close to its huge joint venture operation and factories with Shanghai Automotive Industry Corporation. And just today, the U.S. Department of Transportation announced tentative approval to Northwest Airlines for a direct Detroit-Shanghai route. Indications appear that GM is looking to produce the Volt or its equivalent, most likely in China, and the competition is heating up. The Miles Automotive Group, a startup from California, is already importing electric cars from China and hopes to introduce a full-size sedan model, the XS500, by late next year. That will retail just over $30,000. And Malcolm Bricklin, the famous auto impresario, says he is still developing a plug-in electric car and working with several Chinese manufacturers. So where does this leave GM and the UAW? Both want impossible concessions. How this standoff plays out will have serious implications for the U.S. auto industry, for labor unions in America, and for U.S.-China relations. Watch the outcome closely.
A brief look at China's auto industry. In 1979, Deng Xiaoping visited a GM assembly plant in Atlanta that made as many cars in one day as China made in a year. Then only the most powerful Chinese owned a private car. But a decade later, there were 1 million of them on the road in China, and that number swells each year. In 1991, the Chinese government declared the auto sector a pillar industry of the national economy. Development has been focused on autos and related infrastructure ever since. China is now the number 2 vehicle market in the world after the USA. Passenger car sales rose almost 40% last year. China's first cars were made by several companies in Nanjing and Shanghai in the 1950s, but those platforms never took off. There are now 16 large automotive conglomerates in China, but the big 3 are First Auto Works, Shanghai Automotive Industry Corporation, and Dongfeng. All have extensive joint venture operations with American, European, Japanese, and Korean car companies. There are also wholly private companies that are making great strides, such as Chery.